step into the game. We're talking wood and grain. Charles bring the heat on Southern Yellow Pine. Mascot U.S. species, all is on the line. Greg with the spruce, keeping knowledge defined. Ashen moderates, drop the sacks to the boots. We on the buy, the sell ain't no deep truth. Economics and trends, we got it all so clear. Lumber Word Podcast, best believe we're here. If you want to make more, get in on the score. Join us every week, you'll be hungry for more. Love a big team.
There you go. Well, I think the sales side is finally getting good, right? So
yeah, no, it's pretty good. We'll just jump right into it if that's good with you guys, because half of the banter back and forth is good. I talk about watching soccer, but I haven't watched one game yet.
Whew. Oh, I mean, now I don't know. You know, I for a while there, I thought that soccer was the new Canadian sport. You know. Yeah. They had a run.
Yeah, we had a run. Yeah, just like the U.S. and Mexico, we all kind of hit the wall at the same time.
Exactly. Yeah. I mean, but I'm still. I mean, I don't know. You know, I mean, it seems like a lot of fun and whatnot, but I can't follow the game because I don't really understand. It's like, hey, that guy just tripped him and it's no foul, and then hey, the guy bumped into him by accident and he's like kicked out for 3 games. You know, the game's over, and then they're going, no, you guys can play for another 7 minutes. What? Oh, wait a minute. Let's go ahead a couple more minutes.
Stoppage time.
Like, huh? Garbage
Stoppage time for the guy that fell on the ground and had the theatrics.
Yeah.
So you mean they do the flop? They do the flop in soccer too?
Oh yeah. Just like basketball.
You know, like I get, you know, Russ, I get so much more respect for hockey players after watching that, right? I mean, come on.
Yeah,
absolutely.
Sure. I mean, these soccer players, they're flopping down and getting up and, you know, in pain for like 2 minutes, and they're running around like crazy, like nothing happened, right? It's the greatest scam.
I think if you did a flop in hockey and you got up, like you would get payback for that pretty quickly. Like from somebody.
You wouldn't make it on the ice. You know, you wouldn't get there.
Well, everybody.
Hey, do we want to talk about lumber or what?
Well, I wanted to say,
we got a lumber expert on today.
Benchmark it
in the know.
Welcome to episode 184 with Russ Taylor from Russ Taylor Global. Russ, great to have you back. What have you been doing this summer at Russ Taylor Global?
Yeah, not too much. Getting outside, trying to enjoy the weather. We didn't get involved with any of the soccer games in town, and didn't go downtown to catch the action. But apparently, it was pretty exciting if you're down there. But otherwise, just trying to stay away from the crowd and follow what's going on in the markets as well.
Right on. I kind of wrote a few notes down what I'm seeing on the spruce end and probably on other species. Matt is at the actual, I think it's Coeur d'Alene at the inland. So shout out to the to the inland. I guess he's a big deal.
Shout out to inland producers, right?
So I kind of wrote down steady as far as there's not a lot offered out there right now between Eastern Canada, Western Canada, US. I mean, there's a few things being offered, but not like it was. People are looking for, Greg, I don't know how many times I hear Greg going, this person's looking for a load for 2 weeks out that I've just took yesterday, said their yard is out of wood. And then he proceeds to call 10 people. How can a yard run out of wood? So a lot of that. People, what I noticed yesterday, we sold a bunch of 2x4, 14-foot, 2100 spruce. And remember when we talked about 3 or 4 weeks ago on the podcast, how 14 Southern Yellow Pine was just creeping over 16s? Well, I guess what's the price up in the Midwest now that you heard, Greg, on Southern Pine 14s?
Over 700.
Charles, that sound about right?
Yeah, I was going to say it's probably $715, honestly.
So the people that normally have switched. Quoted a guy 2 days ago, came back, wanted to buy a bunch of that stuff, and in weeks previous to that, he was buying pine $20, $30, $40 cheaper. Not anymore, right?
No.
From where we sit, lots of still stud 2x4 action, and cheapest item is.
Ash,
go ahead, Charles.
One thing to note is the price discrepancy between 14s and 16s in Southern Yellow Pine. It's a solid $50 to $75 across the board. So if there's an opportunity to sub a length, or you can figure out a way to maximize a 16-foot, that's going to give you your best bang for your buck right now.
Yeah, for sure. It's starting to make that move in other species. If you remember 3 or 4 years ago, and maybe it was during when 14s went a big premium on a lot of items. So we're seeing a lot of stud out there, but 6-inch man continues to just run anything 6, 8, or 10-inch that's 10-foot length. Everybody wants. The cheapest item out there now is 2x4, and we got July expiring next week. Greg, is that right?
Next Wednesday.
It seems like, the commitment to traders show the industry's trying to get a little bit shorter, and the finance bros have been buying out of their shorts, but hasn't been really exciting on the CME watching that trade. Although Southern Pine, what's that up, Charles, since the end of May? Up $70, $80?
$80, I think. $70 or $80. I think we were at 485 or 490. Now we're at what, 550, 555?
So the one thing I was looking at, Charles, is that it looks like the spread between the East, Central, and West has really widened about as wide as it gets. Is that true? I didn't look at the exact numbers, but it looked like that to me.
117.
Yeah, 100. I mean but that's about right, because I mean you figure a mill freight from the Central back east is going to be anywhere from $80 to $115. So the Central wood is not moving east the way it has historically. It's kind of staying in zone or going to the Midwest.
What about cars though, Charles? Cars haven't moved that much in price. Well, I mean, just saying, it's like if you're going to do a basis trade with Southern Pine, wouldn't you sell the east side and buy the west side cars?
Yeah, if you can get the allocation. It's all about timing, right? I mean, that's the problem. I mean, to your point, Greg sells wood, and 3 hours later, the same guys, or 3 days later, the same guys calling him saying, "Hey, we ran out of wood," and it's like, well, what do you want me to do about it? I can't make it appear.
No, that's not what I say. I say I'm going to load the truck right away. That's not what I say. It's loading up right now.
Right now, on the way. Well, I just put a bow on it, actually.
On the way.
I ran out there.
We're
and
going to load that one tomorrow.
Kind of like the little rail car I used to have on the wall when I worked at Block Lumber, and a guy would call for his rail car, and I'd look up and I'd give him the car number off of the Tyco rail car.
I mean, I will say a real positive for us has been trucking out of our northern reloads, and, to a lesser extent out of the Cape, has loosened up considerably, both in the volume of trucks available and in the pricing. The prices have moderated. They're not back down to where they were, beginning of the year, but they're not the crazy prices that we had in March and April.
Yeah. Well, that is a perfect time after we've chatted about that to jump in with Russ, because Russ, we need to get educated on some stuff we've been talking about, and we're probably way off on numbers again. Where do we want to start, guys? Like on production numbers, or what do you think, Russ? What's the easiest place to start at?
Yeah, we could just start with production numbers and then wade into some of the export data. But just looking at, I've got different periods of data. Like, for example, I've got April data for Canadian lumber production. Compared to last year, it's this time of year through April, it's off, 10.2% lower. So that's a function of duties and lower prices at the beginning of the year. BC lumber production is only off 8.7%. So that actually means that the rest of Canada's production is lower, is greater. The drop has been average. So that surprised me with that data. But nevertheless, production is still lower in Canada as a result of mainly because of the tariffs and the lower prices at the start of the year.
Well, the interesting thing is, Russ, I did see that. It was just an interesting comment on that, where that's production. But when I look at shipments for the last 3 months, they're down like almost not at all from the April, May, June shipments versus last year are almost identical. The shipments, right?
Yeah. So no inventory.
I mean, the June number was 942 this year versus 903 last year. But I'm just saying, for the 3 months, they're basically flat for shipments, which I guess makes sense. Is your production's down, but you're shipping your inventory out because the prices are better.
Yep. Exactly. That's exactly what's happening. And that's, so that means inventories at the mills are tighter and they can push prices a little bit higher. I think that's part of the trend. And then looking at, Canadian exports again, I should have updated my data, but through May anyways, Canadian exports through May, down 13.7%. To the US, down 15%. To Japan, down 21%, but China up 11%. So a little more opportunities in China for low grade, I suppose. But it's a small, tiny volume by comparison. But that's the Canadian story. BC, is the same number as Canada, down 13.7%. U.S. exports down 17%. Japan minus 19, and then China up 11. So, again, lower production. That means lower exports. Obviously, to the U.S. with the tariffs being prohibited, that's certainly slowed down through the first 4 months. But I agree, the last couple of months with higher prices, we've probably seen higher volumes moving into the U.S. As the prices are attractive for a change. So that's I was a little shocked when looking at some of the prices, looking at like studs. I mean, stud prices are the same price as random length on SPF. I haven't seen that in, I don't know since when. Usually there's $100 or more discount, right? So that's another shift in the market, allowing more exports from Canada into the U.S. with the higher stud prices.
In the marketplace, 8-foot studs in the East are trading $50 over. 9-foot studs in the East are probably right now $20 or $25 over. Combination of disproportionate curtailment of production in the East and a lot less shipments from Europe.
Yeah, for sure. Yeah.
I mean, and I'm actually I've sold 8-foot studs at the same price or more than 2x4 16s in spruce in the East. And I'm actually, there was a few years ago, it was probably, maybe it was it, Ash, I don't remember whether it was COVID. I think it was COVID, early COVID, right? When the home centers blew up and 8-foot studs traded at $100 premium, and they were cutting 16s to get 8-foot.
Yeah.
I'm not going there yet, but I'm trying to get warmed up to it.
So what are 2x4 9s trading for in the East?
2x4 9s. So 660 Chicago in the East, or 660, 670. I saw a couple cars.
They're high 600s to low 700s delivered in the Southeast, Charles. They're around 700-ish, low 700s. I mean, I think I just wrote a mixed truck for 715 North Carolina.
Yep. Okay. And 2x6 9s, from what I hear, 800 and higher down here.
845 to 875, depending on where you're going.
Wow.
Southeast. What's pine?
That's
mid
incredible.
sixes.
Yeah.
There's a $200 spread.
No, but that was good observation, Russ, on that. We're trying to stop buying more cars of studs, but we can't help ourselves sometimes. Like yesterday, we were going to not buy anything, and we compared notes at the end of the day, and we had bought a lot more cars of studs, because we got to stop ourselves at some point here, Greg.
I mean, so when, Ash, when you open the bag of potato chips, do you have one?
No, that's why I have to buy small bags.
Do you eat the whole bag? Or do you eat the whole bag?
I eat the whole bag. We haven't been talking about in this Charles, Britt, Russ, Greg. I mean, 4-inch has remained just 4-inch random, the cheap item. But I mean, obviously, in my opinion, spruce studs are the one thing that people don't really substitute as much on step multifamily, Charles, and step pine for, right? They do, but there's just so much less production out, especially going into summer shutdowns. And I guess, what's the incentive to bring more production on right now until we get to the end of the year, and maybe they've got a little relief on pricing, Russ? Or how does that happen in Q4 when they readjust some of the calculations?
For the duties you're talking about?
Yes.
Was that the duties? Yeah. So they in August, probably in August, the new duties will come in. Probably August. It could be October, but it'll be 10% less. So instead of being 35% duties, it'll be 25% plus the 10% tariff. So it'll be back going from 45 total to 35, and that could be as early as August.
So now you basically just lose less money, or I guess that's a great conversation. Where are we at in the cost of production in North America now? North America and Europe, if you got the European stuff, because certain.
Yeah, I do, and it's always a bit of a crapshoot trying to figure stuff out. But with the higher prices, across the board, and the wides being stronger as well. The BC industry which was always losing the most money on, and I do it on an EBITDA basis, so cash costs make it better. But I've got BC average mills sort of at a small loss going all into all markets, as compared to a much bigger loss, 4 months ago. And then I got the rest of Canada kind of in the black now. And of course the highest margins are in the US. They have the advantage of no duties or tariffs, of course. So they're making, according to my calculations, ungodly amounts of money. 100 to $150 a thousand board feet.
Is that the South or the West or both?
It's both. I mean, and again, looking at the prices of the Western species over SPF, it's $100 a thousand higher than SPF. So they're gaining.
It was interesting. Matt sent Ashley and I a note. I don't know, Charles, if you were on that or not, but
I'm pretty sure we were all on.
No, we weren't.
But it was like Sunday night of 4th of July weekend, and because he was going to be out this week, and he was like, Western lumber is off the charts. He's going, I think this thing's going to run another $50 to $100 a thousand, and then it's all going to come crashing down in the end of the year. And I went, well, okay, thanks for that. I mean, have a nice week off.
So what you're saying is he's long.
One could infer that if
he's a mill though, so he's always long.
If you talk your position, yeah. Well, I always try to tell what our position is, and we're still. I guess I still say we're all in, Ash, in terms of an inventory position. I could build the case that he's right, that they're like, what inning are we in? Matt likes to talk about that, and I'm going to go. Are we in the 5th or 6th inning? It feels like we need to have the, 2 or 3 weeks kind of blow your brains out market. I had a couple of conversations where people made, and I contrast this a year ago. A year ago, everybody was going, oh, the mills need to curtail. The mills need to curtail. Prices are, prices can't stay down here. But it took so much longer. I had people say, yeah, we're begging so-and-so to make more lumber. I'm like, wow. And we're a market that, kind of overshoots both on the high and on the low side. So I'm not, it kind of feels like that, and to Ashley, to your point, when you said, like I have people going, hey, they're running out of wood. I mean, how is that even possible, right? Given everything that we've known over, obviously if they're running out of wood, they haven't been listening to the podcast because we've been up on the table, right?
Yeah. I think a lot of people look at the supply or the demand side they noodle out that's going to create pricing differences. And that's not the case in lumber. In my opinion, it's always demand. It's always supply. But Russ, I wanted to go back to your numbers. So most of Canada's in the black now, as far as running?
Just according to my calculations, with the higher prices and the wides, I've got just BC in the average mill in a small loss, and that depends on where you're located and what your log costs are, because and that's EBITDA, cash costs. Everyone's in the black in Canada at these higher levels. That's my numbers, which I'm not surprised because I could see the prices increasing across the board. And again, talking about capacity in North America, we've dropped a few billion board feet in the last year, and another couple of million board feet in the previous year, 6 billion board feet in the last 3 years, I think. That's closures. And that's against sort of weakening demand, slowly weakening. And finally, even though demand is stellar right now, we've got supply and demand balance. That's why we're seeing people out of stock and mills starting to raise prices, because that balance has finally come. It took about 3 years to get there, unfortunately, with declining demand, but the supply has really been. And so going forward, it looks like if we ever get a demand rebound, that supply side is going to be stretched. And it's going to be this year. Maybe we have a rally in works, maybe, but I think it's going to be next year where it's going to show up if we're finding it and housing starts back up.
So, Russ, I just want to kind of dig into numbers a little bit. So, if I look at, the numbers, and I know you're saying that wides are higher. I mean, part of that reason is that there's very little being made of wides in spruce, but if I look at, kind of a $500 mill net today, and I take out the tariff, that puts you, you're netting at the mill 275, and you're saying that on a 275, and I guess maybe it's with the current exchange rate, which is up around 45% right now. But you're saying at a 275 US mill net that's a profitable number for BC mills. And I guess if I intune that, in the East, I get, I kind of get a, what do I get? We're probably more, like somewhere between 550 and 575 Canadian FOB mill, which, I guess that's probably break even in the East for the higher cost mills that are still running and profitable for, the Barrettes of the world are probably making pretty good money today at, they're close to $600 FOB mill US price.
I guess as far as market direction goes, I think, Ash, your famous adage, wherever the max pain is where I think it's going to go. I don't know how long it sustains that, right? And I think you hit the nail on the head as far as supply being a bigger influence on market direction than demand, right? Especially in the extreme lean times that we're in and how much production we've cut out. I think higher for longer is probably the direction we're going to go. And it's just a level of acceptance as far as a consumer goes to allow that to sustain, right? And then it'll be up to the supply side to, I guess, destroy it, for lack of a better way to describe it.
I guess my question, great point, Charles. But then back to Russ, is there enough supply or idle capacity that literally can come back on in Canada right now? I don't see that. A lot of that has been just hard shuts, right?
Yeah, I think certainly in BC,
and you don't rush right back.
There's a lack of logs. That log supply is coming back.
Yeah.
No, I mean, I'm saying is that, like the commitment, we talked about for a year and a half, everybody can lose money for a while, but nobody can lose money forever. And in a lot of cases, I think, the curtailments, the hard shuts and the curtailments have been a function of, hey, we just can't keep doing this any longer and incur those losses. I remember talking to, one of our suppliers in the East, and he basically said to me, he goes, our fixed costs are so high that at the prices, we're going to keep running because we lose less money than if we're shut down. And so, I said, so you have to sell what you produce every week so you have cash to buy more logs to lose more money. Okay. How you can't do that forever, right? And I think that's, we've gotten there at some level for sure.
But that, Ash, as far as idle capacity, that's the canary in the coal mine, honestly. Where that level sits is really going to be the determining factor of sustaining kind of where we're at and creating a new equilibrium as far as a price point, right? Or does it get, destroyed because you've got another 15% of production that can come on in 8 weeks or whatever it is, right?
I mean, historically, mills had a bunch of idle capacity, could come back on with more shifts and everything, and it happened a lot faster. I just think there isn't enough. I know, Russ, you have a little delay here, so I'm going to let you talk because you had a point you wanted to make here.
Okay, sure. I was just going to say in Canada, the Canadian log supply is tight. I mean, in BC, we're short of logs, so the mills really can't come back. The rest of Canada, you have to plan your logging, 6 months in advance. So if you're not building inventory to add a shift or something like that, you can't really do that, especially by the end of the summer when your logging season's more or less finished. So, or the early fall, I suppose. But that's kind of the problem in Canada. Same with the European volumes. They're facing extremely high log costs, and the prices in the US, even though they've come up a little bit, I've got the European mills kind of around break even. Well, Sweden and Finland, I guess mainly Sweden, kind of at break even on an EBITDA basis, which is why their volumes are, I've got them in at a loss because their log costs have just gone through the roof. So it comes excess capacity, but are you going to be able to get incremental logs available? And from the Canadian side, you've got to be planning ahead for that for winter. And so the U.S. South is kind of the one area where perhaps there's incremental supply of logs, and that's where the extra capacity can come in. Pacific Northwest, again, logs are always tight, so you've got to be really building your inventory if you want to try and add a shift in there. It's just, an extra shift, maybe a partial shift is different. So it is a supply side about incremental capacity maybe is more limited to come back on the short term. They've got to be looking a bit more medium term to be able to add more shifts and therefore have more of a log supply available.
Need deeper insights into wood products prices? At Fast Markets, we track over 1,600 price items to help you understand the narrative behind the data and market trends. Our team of experts brings years of institutional history to every price assessment and market report we deliver. From harvesting to housing, we cover every link in the supply chain to provide a complete picture of market dynamics. Use our forecasts and analysis to stress test your strategy and stay ahead of volatility in these critical markets. Stay informed and make better business decisions with Fast Markets. Go to fastmarkets.com/lumbertalk to learn more.
So a question then for Russ and Charles, like Charles, you know how you kind of enlightened me months ago how there was some Southern Pine mills slowly taking off some production, right? And that's where all the excess capacity is in the South. That's why the Canadians buy the Southern Pine mills. You can ride the clutch on pine with Gatewood coming in and out or shutting it off. Is that in like, Russ, do you follow the Southern Pine side? I mean, I heard that we're actually production year to year is off right now in Southern Pine. Is that true or is that wrong?
Yeah. I'm going to say on the U.S. side, I've got only 3 months, the first 3 months of production, but the U.S. South is off 3% compared to a year ago, and the total U.S. is off 2%. So the South had some weaker prices at the start of the year. That may be part of it, but it's a bit of a puzzle because with all these duties and tariffs, you would think and the margins are very high right now. You'd think the U.S. South would be churning it out, but first quarter they were not, and maybe in second quarter they are. But it's a puzzle, and that's part of the weak demand, I suppose, that's coming into play in all of this.
Could it just be with the consolidation, the mills, and in the majority of production held by fewer people? They're just a little more intelligent now of riding the clutch and knowing like when not to produce a hell of a lot more. And just, I mean, I'm trying to guess what's the other reason for it. I mean, usually the market would be swamped with wood otherwise.
I think the first quarter is probably most affected by adverse weather.
We didn't have any. We didn't have rain for like 90 days, man. I don't know if I think I remember praying for rain, so jobs would slow down, and the expectations would kind of tamper themselves a little bit.
Well, Charles, what's your feel on that then, man? What I mean, the pine mills, I think they've just gotten better at not wanting to ramp up. They can't probably labor,
but like mills is like, production guys, it's like, hey, they want to run so they have the lowest, so they get their cost at the lowest. That's what the production guys are all about. It takes a lot of losing money for somebody upstairs to go change that, because in the meantime, production guys they're all about production. We're going to make more, lowers our cost per unit, bada bada bada.
But if you can't turn the lumber into cash, none of it matters.
Right. So, is part of the issue
logistics?
Like I remember a guy telling me one time hey, we don't shut down because the price is too low. We shut down because we have no more room to put finished product. Where all the transportation issues that came into play starting in, February, March.
Yep.
That build up the inventory. Go, hey, we have no more room to put anything because we can't get it out of here. And maybe that's the answer. I don't know.
All right. So,
and has that alleviated itself at this point, Charles?
I mean, there's still trucking issues, right? I mean, I don't know that those mills that made decisions to do whatever it is that they did, right? I don't think they've reversed those decisions up to this point. Cause I mean, it's still difficult. I mean, it's still tough to
Right.
find. I mean, you're talking $6 a mile. And the other thing is when you start looking at the U.S. South and some of the curtailments that have happened over the past 12 to 18 months, I mean, the state of South Carolina got hit with almost 1 billion board foot all at once in like a 90-day window, right? So when you have that happen, all of a sudden you have the mills that are still standing and still operating primarily on contract, and let's just say 60 to 70% on contract. If you want open market wood, you either got to buy it from the north and pay more for it out of North Carolina, or you got to truck it from Georgia. Or the other option is you truck it from the central, but you can't do that now because your freight rate's up $48 to $56. So now you've got a scenario to where mills have to create a different level of liquidity, right? From the secondary and tertiary markets that kind of bite into what y'all do in the Midwest, right? But as far as a production level, I think you'll see it sustain whatever the number. Let's just say the number was 2 in Q1. I'd say Q2, Q3, and Q4 will probably be around the same level. I don't think you'll see much more off, and you definitely won't see anything added. To your point, Ash, you can't. I mean, it's still difficult to get people to go to work, right?
Yeah. Well, why try to force? If you're making money, why try to force something that inevitably could hurt you if you too much lumber, right?
Well, I could ask that question.
But like to Greg's point too, is these mills,
right?
so they're basically maxed out.
Wherever they put that red line,
And I think
probably they have room, but I don't think they're going to use it.
And some of the mills in the South are having problems with selling wood chips and sawdust and so forth as well, right? With all the pulp mill and paper mill closures. Yep. So that's tightening up their ability to operate as well. So that's one of the constraints in the South.
Well, because they got to make up those that cash flow on the price of lumber, right? I mean, if you're used to moving 100 trucks of chips a week and you're moving 50 and you don't have a competitive bid, you just got a buyer, right? You got to do what you got to do. Perspectives change quickly. And I think Kip touched on that the last time he was on.
Yeah. So question, pulp and paper and byproduct. I heard up in Canada, Russ, there's actually more demand for the byproduct. There's not enough of it. Is that the case? Because there's been so many closures. There's not.
Yeah, exactly. Lower lumber production, less wood chips available. And that's why, Crofton and Vancouver Island shut down because of that. They were bringing up wood chip Oregon and using battle on the margin. So they shut down, and there's a little bit of a balance now because of that mill is shut and there's a little more chips available, but it's still very, very tight for other pulp mills in the province. And there's the possibility of another closure looming if they can't secure enough byproducts to keep operating, which then makes sawmills economics worse if that's one of your suppliers of wood.
Yeah. So
chips. So it's with the reduction profitable.
So sitting here on July 8th and just steady takeout. I mean, this market has been moving a lot better than I thought it would, and prices, like, I'm surprised every day how we're getting more and more for every stick than the day before, and it just keeps climbing and climbing, and nobody's complaining about it. Mainly truck business, because I talked to some brokers / traders that trade cars, and they're not seeing as much business. It seems to be quick trucks or trucks within a few weeks, and the distribution model has paid off. And as we always say, inventory is an asset when you have it on the ground, and it's paying off. Where are we 30 days from now on pricing, 60 days from now on pricing, and then where are we going into the end of the year on stuff? I mean, Charles, I'll throw it at you. What do you think pine prices will be on the different regions on 4-inch 30, 60, 90 days?
I mean, West Side is obviously the weakest because it's very compartmentalized, and you've got the biggest consumer, i.e. Texas, that's kind of off right now. If things change there, I mean, that's going to be the key indicator there. And then the other, as far as Central goes and price volatility, I mean, I don't know where to call a number, right? But if you're in the Central and you can get more access to more rail car equipment, you'll be able to facilitate the Midwest need a lot more efficiently and effectively than anybody on the East. And that's a competitive advantage to create more liquidity, grab more market share, and still be profitable, right? Because the stumpage in the Central is typically a whole hell of a lot cheaper than it is on the East side. And as far as the East side goes, you're going to have to, prices, I don't think somebody asked me this question yesterday, and it seems a little toppy based on all the demand metrics and all the things that we've discussed here, right? But the problem is, to your point, Ash, is supply typically drives what does and doesn't happen in this business, right? So if supply stabilizes, and let's say that number's 2, like it was in Q1, and it stabilizes through Q2 and Q3, you're going to see prices stay longer or higher for longer, and you're not going to see a big $150 drop. You might see what happened in February, March, or middle of March. I can't remember exactly when it was, when things were they had $50 to $60 premiums everywhere, to no premiums, to $30 discounts, and then all of a sudden 2 weeks later you couldn't buy at print and they were 15 over. So I think volatility is going to be the name of the game, and it's the trick's going to be staying liquid. Hate to give a roundabout answer, but
boy, you know what? I was just thinking of like that. I was thinking of the scene from Boiler Room. Hey, and the greatest thing about it is I'm liquid. Yeah, we don't hire brokers in here. Ash, I am going to a couple of dynamics for our listeners. July futures expires a week from today. Total open interest in July lumber is in the low 6,000s, but the July contract's actually still pretty healthy, almost 1,600. As you indicated early on, 4-inch spruce is the most undervalued item, and we want to talk about liquidity. What has the best liquidity? Oh, that's right, futures. I look at the weekly chart, and it says, what it tells me is say, hey, I got a $680 to $700 upside target. Now, I don't know if July is going to get that on some last few day blow off like we had. Remember, we had that the last couple days, Ash, where the board rallied like $80 a thousand.
Yeah,
I think that was November of 24, maybe. Yeah, but yeah, no, I'm gonna stick with that. I mean, I think I've been pretty consistent over the last 60, 90 days on being fully bulled up. Like I said, I've come into your office multiple times and said, hey, I really think we should be buying September, but I just can't do it because we have an all-in long cash position, and being Texas hedged just seems to be irresponsible.
Yeah, no doubt.
Because bulls make money, bears make money, but pigs get slaughtered. And Texas hedging, I can't do it. Can't do it.
I mean, look at if
I've done it before and it never worked out for me. That's why.
I'll kind of go to Russ. Kind of it's going to kind of help me answering this. What he said with the studs. So I feel if everything returned to its normal historical basis, studs stayed the same price they are today, where would that put 4-inch at? Like 6. That would put it probably in the 680s, right? To 700. If 2x4, especially 2x6, if all these studs stayed historical to their basis and 4-inch returned to that, where should we be?
Yeah, you should be 550 mil plus 120, 670 Chicago on 2x4 random.
130 now, right? 130, is that right?
Okay, 680, yeah.
Yeah, I'm just getting closer. I'm just trying to get closer to your number.
Yeah. Thank you.
There you go.
Thank you.
Matt Lehman was asking, what is your take? And I think this is to Russ also. To Russ, what is your take on increased June Canadian shipments?
Yeah, I haven't seen that data yet, but I think with the higher prices and the better weather, you're probably going to be more to the U.S. as a result, because you can, again, my numbers show where their mills are basically positive on an EBITDA basis. So that would be market forces are moving wood into the U.S. At positive, not at losses for a change. So that's probably the reason right there.
And with the exchange,
demand factor,
with the exchange, yeah,
and the weaker dollar as well. Sorry. Yeah, and the weaker dollar as well.
Well, when also you highlighted more Chinese shipments, so low grade has been getting a better return here. We see it in the pellet manufacturers. They're all buying on grade now. A lot of them. They ran the price of 2x4 7-foot studs, and number 2 up $100. And I think that, you remember early in the year when all the Canadian mills were saying they're getting a better return in the Canadian market? I think that ship has sailed. And I think we saw that in June shipments coming across, because they're not selling as much on the Canadian side, or the Canadians kind of bit off as much as they needed and have plenty with the business they have relative to North America.
Yeah, and the housing starts in Canada are a bit flat right now too. So there's a slowdown in the housing market. So that's not going to help the mills trying to sell into Canada.
Yeah, exactly.
Russ, when did you say
so
you were expecting to see the reduction in CVD and AD? October? Did you say you're expecting to see
it's
that?
as early as August. It's scheduled for August, but often if the Department of Commerce is busy, they delay it till October. So we don't know, but it could be as early as August. And like last year, it was August, but it could be October as well. So we just don't know.
Right. I think that what I heard was due to the U.S. government shutdown early in the year, that they've pushed it to October. I think that's what I heard. But you're right. Last year it was August.
Gosh, if the certain faction hears our podcast today and they know the Canadians are making money, I'm sorry already in advance, because they're going to be like, oh, we got to punish them more. Well, they're making money. We want a new deal.
Why you got to be like that?
We want a new deal. That's not enough. We haven't heard them enough yet. What do you think about that, Russ? What's going on with all that?
Yeah. Well, the duties are part of a calculation, and I shouldn't get into it, but it's a little bit of a bogus calculation once you start peeling back the onion. But anyways, it's a calculation, and it's a bit biased. But the tariff, the 10% tariff, is at the discretion of the president. So if he gets any pressure to raise it, he could easily raise it in a heartbeat. No calculations are required. He just stroke of a pen, it's done. So, I don't know. Can we figure out what Trump's going to do next? I don't think so. But anyways, that's what he could do at any time if he wanted to.
Yeah. No,
yeah. He and Carney are not big buddies, are they? I mean, maybe he likes them more than he liked Justin, buddy. Huh?
Yeah, no, I think well, Carney's calling his number a little bit. He doesn't like that, so yeah, they're trying to make make a deal somehow.
The article, the article in the Journal today, basically how Carney's trying to rearrange, the Europeans, around like a post. You're basically saying that, we're the enemy and that, they all need to band together. And so, yeah, it'd be, it's a crazy world.
Question below. I don't know how to answer. It says, why is Western Forest Products, the WEF stock, up 50% year to date, and Interfor is also doing really well?
Yeah.
More buyers
than sellers.
Yeah, well, first, Western Forest Products is more specialty products off. Is that correct, or am I wrong on that?
BC coast, a lot of specialties, export to Asia and to Europe a little bit, less to the US. But so I'm not sure why those markets are not doing very well, but maybe their particular niche products are. But it was hammered a while ago, and maybe that's why, and it's just come up more back to a more realistic value. And Interfor being a pure play with lumber prices high, I guess that's kind of why they're up as well.
Yeah.
I mean, you think about it, like, let's just say that we're right, and lumber rallies another, $100 $1,000, and Charles is like, hey, longer for higher for longer. I mean, this is all in a backdrop of a completely flat demand curve in the US. What happens if demand improves even the slightest bit? Then, we could be back to $1,000 2x4s, and to Charles's point, what will cause the most people the most amount of pain and suffering? It's going higher. It's not going lower.
Yeah, and the demand side of things, as we know, has such a lag. You figure it out once it's already happened.
Yeah, it's over with. Like, you're already 3 weeks behind the 8 ball. 100%.
Yeah, exactly. Well, Russ, what do you have going for the summer over at Russ Taylor Global? What have you been working on, projects and so forth?
It's been wider. I'm looking at some of the export markets though a little bit, trying to understand. I've been spending a little bit of time looking at the European market, the cost of logs, the cost of sawmilling, and I mean, it's just there's red ink in Europe, which we haven't seen in a long time. There's been mill closures, mill curtailments, all kinds of things. It's starting to balance out a little bit now, but log prices got up way too high. I mean, looking at Germany, log prices up to 160 US dollars a cubic meter, compared to the US South at 50. Huge advantage to the US South by comparison, and even BC at probably $80 US cubic meter. Still, the Europeans that's why the European volumes have been reduced to the US, like year to date through April. All the European countries are off. Germany's off 50%, Austria's off 50%, Sweden's only off 2%, but they have a bit of a sweet spot sometimes with logs, but nevertheless, it's the Europeans are in retreat right now. Are there higher prices somewhere else? Because they're both break even in the U.S. So I think perhaps they've got some opportunities in the Middle East, North African markets to kind of balance it off a little bit. But I expect to see some more volumes from the European market coming back as these prices stay high.
Well, certainly they like to ship over, and I think that's kind of kept the lid on they like to ship a lot of 16-foot stuff over.
Yeah, for sure.
Well, guys, Russ, so what's the best way for people to get a hold of you? I'll put it in the show notes when I put it out on Spotify and Apple, but just so they know, people that are listening.
Yeah, probably email Russ Taylor at Russ Taylor Global or www.russtaylorglobal.com. Either way.
Perfect. Well, I appreciate it, Russ, Charles, G Money. You got your microphone going, Greg, today?
No, I don't. I still got, I've got it set up here. It's baby steps. Come on, man. Baby steps. I got it set up, but don't I sound great as it is?
No, you do. You sounded good. Yeah. All right, gents. Well,
hey, Russ, always good to see you. You're looking well.
Yeah, thanks. And great to catch you guys.
You look good too.
Pleasure's all mine, fellas. Y'all be good.
All right, guys.
Cheers. Bye.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.